Great for the economy, Rick. Good for the market.
Not for the rates market. So markets are adjusting as they should be. I wonder though, you're starting to hit real rates now that are getting to levels that are starting to be fair. We talked at the beginning of the year. Should the 10-year go up? Should you get to 3.25? You're pretty darn close. With real rates where they are. I still think the Treasury market can elevate a bit more in terms of where yields are. But listen, I think one of the things that Mohamed said I agree with. But one of the things I may tilt a little bit towards, markets tend to focus on what is coming next. And there's some interesting things in this report. It's solid, but last month was weak. But start to see some things you were seeing in ISM, we're seeing in the housing data, a bit of softness. I follow on some of these numbers. Today, for example, temporary hiring, I always look at that as a leading indicator. It's interesting how that just keeps trending down, meaning the current data, the current hiring is solid, but I think we have to watch whether the retailing number was not that great this morning. Anyway, so it's a solid number, no doubt. Yeah. But I think that the actual first derivative of growth here is stable to maybe a bit slower. Still good, but starting to trend down.
Michael Collins?
Yeah, that's the dilemma, right? Growth is strong, the job market is really hot. And the Fed is going to keep going. These data embolden the Fed, right, to keep hiking rates probably, and that's a little bit of a risk not only for the bond market but for risk assets, right? As the first derivative is starting to roll over, and I totally agree with that. You're seeing it in a big way in places like Europe and China, where maybe even the second derivative is rolling over too. That the Fed is going to hike rates into a global slowing economy.
You do see the decelerating global growth story, particularly in Asia, more so in Europe as well than the United States, but we started to see it in the ISM. The global manufacturing PMIs have really rolled over in the last month. Mohamed, what are your thoughts on that?
So I think two things. One, for the US, the cyclical component, yes, the first differential is going negative. I'm not so sure about the structural component. So I'm a little bit more optimistic than my colleagues on the panel. The second element is that the US continues to outpace other countries, and this divergence in growth and in policies will get bigger, not smaller. And that is a complicating factor both for markets and policymaking. So I think don't underestimate the structural side to the US economy. Yes, the cyclical is slowing down, but structural is not. And keep on focusing on the divergence story, because that's going to remain a big theme this quarter.